Hey, welcome to the exchange. I want to take a look at crude oil prices nominally and crude oil prices inflation adjusted. I think it's a very interesting comparison. This is the crude oil graph. Basically, it's a nominal graph, the one you're probably very familiar with. So right now, about $100, $102 right now, which it basically matches the peaks of like 2011 through 2014, within that $100 to $100, $105 range right there. You see the big spike there in 2008, hit $140, which, I mean, we're not that far away on the nominal graph, though. But the other graphs I'm going to show you real fast. It shows you we're very, very different in that aspect. So this is the same chart of crude oil prices, but this graph is actually inflation adjusted. So you can see right here, it's lagging a little bit. We're at roughly about 109 on this graph. So really it's about 102 right now. But as you can see, I mean, looking at 2011 to 2014 range, we're well below those kind of norms right there, those peaks right there. I mean, they're at roughly, 115 to 125 in that ballpark. Look, in 2008, that massive spike we saw earlier, I mean, it's 100 and it looks like $183 and some change right there. So, I mean, we are nowhere near that graph. And that's why the pain we have in 2008, 2011 through 14, I mean, it's a whole different level of pain we have for both transportation, airlines, trucking, shipping, etc. I mean, we're getting closer to there, but the problem is as you get higher and higher, I mean, start encountering really demand destruction. We're also, once you get in the, 120 plus kind of range, and in this chart, I mean, it's going to be very bad for airlines, for trucks, for everything else. In the economy right now, I mean, we're at a weird spot where, I mean, it might be looming potentially too. And if recession hits in the US, this price will drop even with the war in Ukraine, just because the demand side is going to be absolutely evaporating. I do want to point out too, on really a near-term relative basis, so 2015 and onward, we've had very, very cheap oil. And obviously when COVID first struck, in 2019, 2020, I mean, oil absolutely crashed. And we saw those negative oil rates for a while there too. But on a relative basis, oil has gone up a lot, and it feels that way too. But on actually historical basis, we're well off the norms of even 2011 through 2014. I mean, those are much higher prices than we're at today. In 2008, I mean, it's nowhere even close right now. But I think it's very, very interesting. That's why I want to show you this chart, kind of show you what I was thinking, what I saw. But yeah, that's crude oil in a nutshell, basically nominally versus inflation adjusted. But yeah, let me know your thoughts on this one, whether you're bullish or bearish. I mean, this really can go either way. There's kind of pros and cons to either way it could go. But yeah, be sure to sub, like, comment down below, and that's the exchange.